Good morning, everybody. This is Chrissy from Solstice ATR. I hope everybody's doing great. On March 13, I'll be covering for the following week from March 14 through end of the week around the 19th of Friday, the overall market. We use adaptive algorithm to basically to trade whether it's a bearish market, bull market, or side market. You can find us at Solstice ATR on Twitter under the handle Chrissy Farah. On Discord, this is my handle. And at the same time, the weekly videos are offered for free. You can hit the subscribe on YouTube. As well, if you like the video, let us know. We use this for illustration use only. We're not a broker dealer. Past performance doesn't indicate future results. Let's first start by taking a look what the S&P has done in the last week. It's nearly at the annual high of the prior 2 weeks, which was to 29.59 and a quarter, or the SVX. We have to learn a couple of things in the economy. When everybody's bearish or bullish about the market, to have an open mind to understand the trend, change in trend, and the direction of the moves, whether it's on a short term or long term. You have to analyze the charts by looking at them on the long term in relationship to the short term and what the outcome is coming. We got the economy stimulus, we got interest rates, we have unemployment, people going back to work, reopening, the vaccinations, and does the transportation, does the banking industry, does consumer products, technology companies, as well as, healthcare sectors and, crude oil and electronics going to give us a chance to understand the trend maybe changing in the direction. Are we going to have on the short term volatility? Yes. Does the market continue going up? Not all the time. It has to sometimes reset to continue higher, and sometimes it gets range bound and it goes sideways. So these are some of the instruments we're going to cover, so you can take a snapshot of it, so you can realize how to look at the different sectors. We'll look at stocks, ETFs, Bitcoin, futures, Forex. And remember, price is an advertising mechanism for you guys. When you're looking at an instrument, are they pushing the stock higher? Are they pushing it lower, or the future or equity? Or is that price mechanisms going sideways, just range bound? So understand from that the things may change differently, and I'll go over this chart a little later afterwards. There's one more slide I will go over. Let's first of all take a look at the first is the fear gauge. Since the February lows of the 19 till March 23rd, VIX has not been able to clear that $35 range to 40 to continue higher, so that way we get a reset. We've had a couple of glitches because of the London closed down, the variant and the vaccinations, and the variant from the African COVID-19, and we had this not a spike because of the shutdowns, and at the same time the economy and the banking sector. We tried to push up and we eventually fell back down. If there's fear and they're pumping more money out on the $1.9 billion stimulus that came out, is it to help the consumer? Maybe, maybe not. It doesn't do much to 1,400 in the US market. But we have to keep an open mind on the bigger companies, what they're doing, and where the trends are. So this is the weekly chart on a 3-year VIX. If I go down to narrow it down to a time frame which is a little slower on an intraday, and I go daily, intraday, we go from daily to, let's say, 30 days range, and we go from a minute chart to a 4-hour chart, we can see that we had a couple of little spikes up and we back down. These are the spikes and the resets, spike and a reset. We haven't been able to go above that $35, $37 range for the bears to come in and take over the market. There will be a slowdown, there will be a reversal, but pay attention to technicals. Let's go now and take a look at some of the instruments I'd like to do. I want to talk about the TNX. I'm going to do some ETFs first, and I'm going on the long time frame to show you that the trends has been a little bit differently than a lot of people think. We're going to do 3-year. We can set a daily, we're going to go weekly and push OK. What I wanted to show, since the spike last time we had the March dump and we reversed. I mean, I'm going to use a Fibonacci, which is not a fan, not a regular fib. I'm going to use an oval so to show you how we can look at it. If I look at the 3-year range from the high to the low, we are almost at the 61.8 fib. And if I get a drawing and I grab a Fibonacci from the high and low, I can grab the low here, the high here to the low, and we can see that the instrument is reaching the 61 point. We're coming to the 50% and we're coming to the 61. Is the 50% going to be clean enough to continue higher and get to the 200 SMA simple moving average and the 225? We have already cleared the 18 and the 50 in the direction of the up move. This is why I put this up there, because I want you to pay attention to the short-term treasury bonds between the 2-year, 3-year, 5-year, 7-year notes and the max up to 10, because the 30-year doesn't give you the range of the whole overall market. If inflation's coming in, interest rates are going higher, to have the economy continue higher or not, we have to pay attention to those sectors. This is why I'm kind of going over it. I'm going to go now to the technology, XLK. This is the tech sector. As we can see on the weekly, we fell down. The Nasdaq has been a little bit under pressure, such as Google, Amazon, Netflix, Tesla, Microsoft, PayPal, Shopify, NVDA, Zoom. I'm just kind of giving some information out so you're not biased to one side. So we're going to start going in the shorter time frame on these ones. I'm going to go to intraday. We're going to use a 30-day range on most of them. We can go up to 90, but I'm going to use a 4-hour chart. We're going to have gaps, which is gray color, the gray color night action in the market. I can hide these, but you'll see more gaps in there. So what I'm trying to show you that the technology sector has recovered a little bit, but on Friday it gave up a little bit in the overnight and tried to push itself back in the prior 3-day range from the Monday push up, Tuesday, Wednesday, Thursday, and then we came back a little bit on Friday. If we take a look at the healthcare sector, XLV, we can see that the healthcare has recovered a little bit as well. If I look at the XLF, this is the in the ETFs for the banking sector. If the banks can charge a little bit more interest rates, because interest rates are going up, they're going to make more money, correct? When interest rates are lower, they're making less on the spread of it. So if you look at it, it's been in an incline, the financial sector, such as the banks, JP Morgan, Bank of America, Wells Fargo, Citibank. So I'm kind of giving Goldman Sachs, the brokerage firm, BlackRock. So we can see that in the ETFs. So pay attention to a little bit the ETFs. It will help you in understanding the direction. If you cannot trade futures or commodities or currencies, at least you can participate in the pool of those investments using the ETFs instead of the individual equities like I mentioned before. Let's take a look at a couple more, and I will switch back, and I'm going to look at the XFI. And I wanted to do this, so this is the financial. You can see the same situation. It's been pushing higher and higher and higher. Pay attention to technicals. We're going to look at now the transportation. Instead of looking at regular individual companies, what I'm going to do in the transportation, or consumer products, I'm going to look at the future, which is the dollar sign DJT. That's the transportation in the market. If I look at it on an annual base, we'll jump back to an annual chart 1 year. So it's happened in the transportation. Since March 23rd, we have been increasing higher and higher. And this is, if I zoom in here, this is the monthly fib for February, the high and low. Have we broken above the February high? Yes. Are we continuing higher? Yes. That means things are going back online, whether the airline companies, whether the shipping companies, which is the cruise liners, things will recover. But you have to have an open mind that do we continue or would we get small resets? And I'm going to go on the last chart on the PowerPoint to show you the down move as well as the up move if we end up going the opposite direction on the short term. So let's go now. Take a look at the dollar sign. I think I can get it that way. This is the 10-year, which I showed you, the fan going higher on an annual base. We've cleared two of them. I did this one. Let's go now. Take a look at the slash ES, which is the 500. I'm starting with the strongest one. I'm going to leave the Nasdaq the last. What I'm going to do is go to a time frame. I'm going to go daily. We're going to go 3 months out, so we don't have to go that far. As we can see on the annual high, we had this annual high here, which we broke out from December. We retested it early in February, early January. Then we reclaimed it back, went to the high to 39.59 quarter. Then we fell from a wedge. I had these channels here. When we recovered and retested that zero line from the monthly fib, we recovered, bounced back up on the 23.8, and we continued high, and we broke those two channels. On the daily chart, we recovered part of the move down in the morning to reclaim part of most of the handle. Are we going to continue higher? Possibility. We have to keep an open mind on this channel coming down. If we retest it and fall back in the range and create a head and shoulder, we can create a cup. Or do we fall back in to the major channel down here? Because this is no longer the annual fib. You can see it. It's from the March. This is from the March low 2020 going higher. We retested it and we fell below the 50 simple moving average. In order to continue lower, we have to lose those levels and we have to lose the 116 SMA. Are we trending still up? Yes. Pay attention to technicals. This will help you keep in line. Let's take a look at the small cap RTY order. 1000. I'm using the small cap RTY 2000. As you can see on the annual chart, this was the annual high as of March. The marker is probably on the left side. We looked up, we fell back down, retested it. We reclaimed 100% of it back up on the February. Then we fell back down, retested the same area where we broke out of this candle. We came back and pushed higher in the last 1, 2, 3, 4, 5 days. We have an annual high for the year. This is the weekly fib from high to low. We measure it, or we measure the monthly and make it from 0 to 100. We always pay attention to the 50, 61, and the 38, and the extensions, the 38, 50, and 61 to the top, and at the same time, the higher ones. So, are we in an uptrend? Yeah, we are in a high linear regression channel, which is a little bit more elevated on an angle. So we have to pay attention. If that angle, do we get a small reset as a cup to continue higher or keep going higher? Let's take a look at now the Dow Jones Industrial Average, the YM. We can see the same thing. This was the annual high. We fell down, went higher. This was the February monthly high, and this was the February low because I used the overnight gaps. As you can see, this is the gap that we had. We never retested it in the Dow 30, because if you look at Exxon, such as oil companies, such as Boeing getting the new contract last week, of 28 airlines, the airplanes that are going to be ordered, it gave Boeing a spike. Dow moved quite a bit in the last 5 days. You can see it. It had a consolidation on Tuesday. Wednesday, Thursday, Friday continued higher, and these what I call three soldiers going higher. This is the annual high for the Dow. Does it continue higher or it does not? You have to pay attention to the technicals and do not be biased to either side. As you can see on this one, when we pushed higher, this was the prior week fib. When we fell down, I did not take it off by accident. I left it there. I should have removed it. You can see we tested the 161 fib extension almost. We cleared the 23, we cleared the 50, and we cleared the almost the 161. So if I remove that one out of here, you can see that the weekly fib and the monthly, I'm going to zoom in so you can kind of understand how I measure. I look from Sunday through Friday on weekly basis. I measure the distance between the high and low. I know where my anchoring is, the 38 or 61. It depends if you draw it down or you draw it up. And I usually look drawing it up for the 38 as support or 61 and 50. Coming back down, I look for the 38, 50, 61, or if I'm coming back up, I'm looking for 38, 50, 61 going higher on the Dow, as you can see. Let's take a look at the last but not least, the NQ, the Nasdaq. We're going to zoom down so we can get the overall market. As you can see, this was the annual high in December 28. Then we look below, consolidated for almost a week and a half. We broke up, we retested it, and we broke higher on the monthly fib. This has the overnight high and low of the February, and you can see in February we have a professional gap here, which I wrote is GAP. That means that there's a small gap in the overnight we have not been able to reclaim. Is there a sector rotation in the Nasdaq? Possibility. But you have to be open-minded that the tech sector from March, they all ran very high. Is there something changing between, consumer products from going to staples, to production, to manufacturing, steel industries and stuff? You have to be looking at the overall sector of the markets, not just at one sector of 100 companies, and you say, okay, this is what's going on in the market. Look at the broad market. We can look at the ETF, which is the NYA. This represents the New York Stock Exchange overall market. And instead of using the daily, I'm going to go for a weekly chart, 3-year. I have the monthly here. As you can see, from February, we fell down. Then eventually we consolidated and broke up, because this represents the all the New York Stock Composite Index. So it's not just representing the S&P 500 or the Nasdaq 100. It's the major overall market. It's still continuing high, and you see on the monthly fib we have broken quite a bit. Monthly, high. Then we had this week's, I did not put the fibs here. I can look, Friday, Thursday, Wednesday, Tuesday, and Monday. This is the weekly fib on it. If you do want to measure it, you grab this low here to this high here, and we get the anchoring for the weekly fib on the NYA. So let's keep it brief. We're going to go through a couple of different stocks. I'm going to show Boeing first. As we can see, Boeing has reclaimed on the annual chart quite a bit. I'm going to go to the annual daily chart. As you can see, we had from March, when it was, sitting at 89, and it was sitting at 160. Everybody didn't want that consolidation here. It broke up, fell halfway, and eventually we got to push higher. So it is continuing to go higher. I would like to see a small reset around the, the 260 area, 250, to continue higher, because we broke out of the monthly fib. We're looking at the Fibonacci extensions, which are a little bit higher, which we can do double the distance from the 0 to 100. You can duplicate that to the top, which you are already there. And if I zoom down a little bit, you can see my extensions where they are for the monthly as well as the weekly extensions up here. Do I want to see a small reset to continue higher? Of course I do, to be able to participate in, buying and selling, into an equity. If you're holding a position, you can trade around that position using options or equities to get in and get out. When it resets, you buy more, you sell on the strength, then you sell, then you hedge your position, in options. That way you protect your capital if in case it comes back in, so you can accumulate more shares. Let's take a look at XOM. I'll do Exxon. When Exxon was sitting at $32 last month, when it fell down here, I said to everybody, this is a range where you can buy Exxon and hold it for a long term. Eventually, it broke there. 38, 61, and 50. This is the annual fib. You can see the 100 line is here. Once I cleared the 38, this will act as support. Then we broke higher on the weekly chart, and you can see it's already reaching a peak of the 23% fib. Does it consolidate a little bit? Maybe oil will come back in because we have a steep high, wedge here. Does it reset to continue higher? Of course it can do that. So just pay attention to what the crude oil is doing, and if there's more pumping, or if they are consuming more or less. So you have to pay attention to that stuff in Exxon. Let's take a look at GOOGL. Google L, you can see, is since the earning report, I'm going to zoom from here. We should do 3 month, that way it makes it easier for us. Since the earning report, it gapped up, it's been range bound. It tried to look up, fell back in this range. Google is going sideways, has not filled this percent of this gap. So we have to pay attention if Google wants to go higher or not, or consolidate for a little longer. Let's take a look at AAPL. AAPL, we should go a little shorter time frame so we don't have to, keep zooming in and stuff. Let's go 3 month, and we push OK. We can see that Apple, after the earning report, fell back down. This is the monthly fib from high to low. We fell below it. We consolidated. Apple has been, in this channel. If Apple's going to continue, we have to keep an eye on this linear regression channel and clear the 18 to continue higher. If it doesn't, it may have a little bit of problem because of the movement that it fell back in. That's Apple. Let's take a look at Amazon. Oops. This is Amazon. You can see the high and low for the month. We've recovered a little bit. We hit the 18 SMA on Thursday. We couldn't reclaim it. We're hovering right at the 38.2 because the Fibonacci is from up here to the low, the machine grab for the monthly chart, for the annual chart, 3 month. But my monthly is just from February high and low. And we've recovered the 23%. We're looking back to the 23%. This weekly fib is very important because that's the monthly and the weekly in order to continue and clear this linear regression channel to the downside in order to continue higher. Let's take a look at, we did Google. Let's do NFLX. And we can see Netflix after the report fell back down. And it's been trying to reclaim that $500 range. Does it consolidate in order to continue higher or not? Because it almost reached the 18 and the 50, got a little rejection and fell back down on Friday. Let's take a look at Tesla. As we can see, Tesla still, range bound, trying to reclaim the annual high. Keep an eye on the annual high. This is a mental number. It's about 717, 720. If it does reclaim it, we're going to look for the 780 area, then eventually the 800. If it does not reclaim this area, keep an eye on the 680. If it falls back in the range back to the 616, we have to pay attention to the 18 simple moving average and the 50 in order to continue higher in that 38% fib right there. So that's on Tesla. Let's take a look at BLK. I'm just going through a couple of different, BLK, that's black. You can see that's the consolidation in it. If you look at Goldman, it broke out. As you can see, it's recovered its monthly fib and continuing higher. Does it continue or come back down? We can take a look at Visa. That's the Visa for you right there. Continuing strong. MasterCard. We can take a look at Lulu. It's consumer products. People use it for sports activities. Nike. I'm not going to go through a lot. I mean, you can see that Nike has recovered quite a bit in the last 5-6 days. Does it continue higher or not? That's the monthly fib. We can look at Mara. That's you can see it because of Bitcoin or GBTC, because a lot of people are talking about Bitcoin and GBTC because that's an ETF. GBTC. We're going to pay attention. Oops, GBTC. Oops, okay. As you can see, I have the annual fib for here. We have went to the annual high and eventually fell back down. Remember, this is an ETF that follows Bitcoin, but it trades in the open market because it doesn't trade in the overnight markets. Bitcoin has reached the prior annual high, broke above it, and fell back in. This is very important, and this is a very critical number between the 61 and the 38% Fibonacci on GBTC. If we end up losing it and we lose the 50 SMA, there's nothing to support it till back down here, people, because we do have these gaps here. You can see them, 1 here and 2 here. And what I'm going to do, and we have this gap here, which we retested, no longer valid. Okay, so this one is gone. I usually don't put a lot of gaps. I usually don't put them on the charts unless it's a future account. In the equities and ETFs, you are easier to see them. And let's do the BTC here, and I'll go to crude and gold. This is a professional gap in the overnight that happened. I have it marked here. We have not reclaimed it. On the weekly chart, you can see we traced the monthly fib extension. That was the prior annual high for GBTC for 2021. We fell back down to the channel and eventually grinded side action and we pushed higher. If this is going to continue, it has to get the support at 57,790. If it's going to fall back in, we have to look at the weekly fib, the month annual chart fib, and the monthly fib from high to low to understand the range that BTC can get to. Can BTC fill these two professional gaps? Yes. We don't want to be holding a bag if you're trading BTC for one reason. You want to trade it on weekly basis, get momentum out of it. When it starts losing its momentum, you want to get out of the way. Wait for a small reset because it's in that linear regression channel, that high channel here, that low channel here. We are halfway through this channel, this midpoint here. There's like a midpoint. You can, I'm just going to put my my mouse and just go, make it like a zigzag, or you can duplicate this one, or you can put a line right through to show you how it looks like. This was called a linear regression channel. If that channel doesn't hold BTC, that means it's going to come back down because it's right on it. You can see, I didn't anchor it correctly. It's a little bit lower, but at least you have an idea how to look at these channels and how to use them in relationship to momentum, higher or lower. Are we above or are we below? Because if I do it correctly, that fib should be a little bit higher, and that's your 50% on it. And you can see that the high and low, you're at the 50. In order to continue, you got this 38% or the 61 high, and you got the 38 right here as support. If it falls through, it goes back to that bottom side of the channel. That's BTC. Let's take a look at GC, gold. This is a very important area that gold has done. This is the annual Fibonacci, the 50, the 61.8. It reclaimed the 61.8, which is around the 1691.92. It's trying to come back up because we have this linear regression channel high and low. On the annual or the weekly chart, I'll do it on a weekly so you can see what I'm talking about, because it is very interesting that we're going to do 3-year and we're going to go weekly so you can see the range. I'm going to push over cap. Since that prior push up, we consolidated for a couple of months here, and eventually we broke up. We had an annual high down here, then we came back down. This is the annual high and low for the year, as you can see from March of last year. We have the fibs. We reclaimed, and eventually we couldn't. We kept going back and forth between two channels, trying to go back up, come back down, go back up, come back down. This was a false breakout. This was false breakdown. And eventually we fell through that 50. You can put another line here. We fell through that 50 and we came down to the bottom of this channel. If this channel is going to hold, and the weekly, it's got a hammer. I usually look for the monthly chart. What I'm going to do, go monthly to show you what I'm going to do. Instead of saying 3-year, we're going to go monthly just to show you how the candle looks like in relationship to what the market is doing. We're going to zoom in here. As you can see, it hasn't finished formation. If this is going to create a hammer and a body inside here, this may continue back to the upside. This is very important to pay attention to it. These are gaps in gold. We retested partial one gap here, but we have not tested those two down here. These are gaps on the monthly chart. So let's go back on a 30-day time frame. We're going to go intraday, 30 days on it. We do 20, that's fine. And let's go 4 hour. I want to show you the relationship to that move down. We came back. This was the weekly high the prior week. I have to take this off, no longer valid. So I anchor every week my fibs, like I'm saying, on weekly basis from Sunday through Friday, whatever the high and low is, and I anchor the monthly from the beginning of the month to the end of the month to make sure we are above or below. We retested the 23 on the monthly. We reclaimed it in the last couple of days. On Thursday, we consolidated. We fell back down in that range to that 1690 area, 94. You see it. This was a nice buy here. My friend got into it, into this trade. He's holding a small position going higher and has recovered, the 20 area. My concern is about the 1714 area and 1705. If it falls below it, then we have a critical area that we have to hold, the 1700, in order to continue higher. in gold. If it does continue higher, we'll look for the extension breaking through the weekly high to get to the 38, 50, and 61 to the upside. This is why I'm putting gold up here, because it's in a linear regression channel. It fell down to the bottom, bounced back. Can it fall lower? Yes, it can. But remember, gold is going to pay attention to the Aussie dollar, Japanese dollar, American dollar. This will keep you out of harm's way. Let's look at oil, and we'll do DX, and I'll finish up with CS at the end. Let's do CL, that's crude. As we can see, crude oil, this is the monthly high. This is the weekly high and low. Crude is hovering around the 50% on the weekly Fib and just above the annual high. You have to pay attention to this Fib. It's very important at $65. If we stay above that small linear regression channel and we do hold the $64, $63 and continue higher, that is great. If we reset and come back to the major down channel 62, I am okay with it because I can buy it back at that level. Crude is very easy to use, and you can use USO as an ETF fund for it. And this is the USO if you guys want to use ETFs for oil. Okay, that's the same thing. Instead of you can't trade crude, you can trade this one. Last but not least, let's go to ES. Brief. I didn't do I didn't do PLTR. I want to do this for my friend. He's in group. PLTR has recovered a bit. I have an issue around the $27.60, $27.30. It has to clear this area in order to continue higher. If it doesn't, it may reset back to the $24.50 to create a little bit of a rounded bottom. I know this looks like a rounded bottom, this area here, because this has a shoulder here. If I consider that, this is the lower one. This is the shoulder. Does this shoulder can hold it to break that 27.30 in order to continue and go back to the 200 SMA or the 116 SMA is very critical. This is why I'm mentioning it in the group. Pay attention to that 27.60 area. Let's go back to ES. Last but not least, a lot of people ask me, how do I trade futures? I trade futures looking at the candle, the momentum of the candle, the price action of the candle. Very importantly is you understand the profile. Sometimes in a profile you do have gaps. You can use the volume profile that's offered through TD Ameritrade, or you can create your own, or you can use the monkey bars. The monkey bars, where the style is, has monkey bars on them. I'm going to go from here daily. Instead of, you see where it says chart, it says monkey bars expanded. You don't need them, or seasonal. So I'm going to use the monkey bars. On a weekly basis, I look at the profile. This is a 15-day, 78-minute. And in the 78-minute, this is the POC. That's the value area high to shadow here, value area low. When we're coming from a price from down to up, when we close inside the value area low, I'm looking to go back to the POC. If it doesn't and it loses it, that's considered to be short. If I'm coming from the top and I enter the value area high here, and I close inside it, I'm looking for the POC and eventually the value area low. If it bounces off the POC, I protected my gain, and it's going back up to the value area high. But if it rejects the value area high and bounces off it, that's more bullish. It continues higher. And we look at the monthly fibs. We look at the weekly fibs from high to low in relationship to where the POCs are and where the time spent. As you noticed in the last couple of days, the time spent were lower, but the POC immigrated higher. So when it immigrates higher, that means the momentum is moving higher. Did we have an inside day on Friday? Yes. Inside the prior day range? Yes. If I zoom into these 2 days, I'm going to just zoom in so you guys can see them a little bit better. What you want to understand is basically where the open is and where the close is. Where the open is and where the close is in relationship to what the market can offer you. And if I go back here to let's go 10 days, 39 minutes, and you can see that the price action, I'm just going to zoom down a little bit so we can get a little bit better range out of the candle. I'm going to do these two only. So we can see that the range and the price action can tell us in relationship to where the time was spent and where the gaps are. Usually when you have gaps, this is a little gap from the prior day. This is the POC that developed a value area here. We developed another one here, and we developed another one here. This is a small wick down and this small wick up. If you look at the bottom, this is very poor low, and we have a poor high up here. In order to fix it, we need to have a better volume profile. And what I can do is go to 5-day 15 minutes, so we can see that the range from the day before, let's just zoom down a little bit. You can see that the bottom was fixed. It had a clean profile, and on the top it has a clean profile. If you look at down here, we don't have a clean top or a clean bottom. It's just a couple of candles, high and low. Where was the most contract spent? Here. But if you look where the closing relationship to where the open was, it kind of gives us an idea where the highs and lows are in relationship to the prior day. What did we do? We closed right inside the prior day's range. In order to continue higher, we have to either break above this area or fall below it to continue on either side. And that's how you use the volume profile. Least but not last, I promised you I'll show you this at the end. And this is what I want everyone to pay attention to. We went over interest rates. We went over growth and value, technology, stimulus package, labor markets. We got to pay attention to the industrial, material, home builders. I did not go over the home builders, which is the XLH, which is okay. You can look at it on it. We looked over the financial. I did not look at the Nikkei, the futures in the Japanese market. You can look at the 6J, which is the currency itself, or the USD/JPY, or their fund. I mean, not their fund, their basically index in the markets. I did not go over in credit markets, which we did cover. And I want you to pay attention to these numbers here. I'm going to maximize the sell. I'm going to zoom in a little bit. The downside risk, this is historical real numbers using the Nasdaq volume momentum isolator. And that gives us some moving average, early stage of momentum from high to low, or from from the 1980s through 2021. Do we have a down move? Yes, we can have on the short term 10-12% declines in the market from 9 to 16%. You can see those years when we had the declines. We had the Twin Tower in 1987, the 2008 real estate bubble, the recovery from 2003 till 2008, then the 2020 pandemic due to the COVID-19. What I want you to understand, if you look at the overall 10-year range, historical overall compounding rate, if we look at the medium, is about 234%. If we look at a 3-year compounding, is between 18 to 45% range. If we look at a 2-year, it's about 18%. If we look at the short term, we can have very little rate of return on the short term. Can we have corrections? Yes. So we can have a range between minus 4% all the way to 20% decline and a recovery. So trade what you see, not what you think. I hope this was helpful. If you like this video, hit the subscribe button. Let us know how we can assist you. You can check us out once again on Solstice ATR, or you can DM me, or you can reach me on Chrissy Farah on Twitter. Take care. Over and